All right. Hello, everyone. Hello, Mr. Steven. How are you? Hello, Orlando. If you're new, welcome. All right, let's just jump right into it because there is actually, believe it or not, there's a lot to talk about this morning. First of all, The Exorcist is going to be redone, which is absolutely terrifying. At least when I was a kid, I remember watching it on TV, not in the theater. I was probably maybe 6 or 7, and now I'm 54. And man, it was freaking terrifying. And if you watch that movie now, it's so, it's just so, I don't even know what the word is. Like in today's day and age, it would be like so unremarkable. Um, all right, anyway, so we got these job numbers coming out, and I'm just sitting here thinking about how this is going to play out because it could be a pretty confusing number. All right, so let's think about this. There's I don't know the exact number off of my head, but I was listening to Jeff Gunlich, who's this like great bond investor, and he was saying that there's never been a time in history where if the unemployment rate moves up by by X percent or whatever, where there hasn't been a recession. So here's the thing: if we have really high numbers, like if unemployment really increases, then that will probably be good for the market, but it might be bad because if unemployment increases, it means we're going into a recession, but it also means that there's less motive for the Fed to raise rates. So, frankly, I don't know what the hell's going to happen, but we're going to just have to go through the markets and see. All right, I'm going to start with today's top story. Momo the monkey captured after a 24-hour chase. So Momo the monkey chugged beer, broke into home while leading us Indianapolis cops on a 24-hour chase. All right, Momo. That's pretty funny. Um, so let's look at the markets first here, see what's going on, and then we'll try to get some idea about these whatever these unemployment numbers. All right, so let's just start with oil. I think there's a potential trade here, a potential reversal. You can see that we've sold off. Just like we expected, we got to 93 and then we reversed. Now, why did we expect a reversal at 93? Well, because it was resistance before. When markets get to former resistance levels, they tend to run in resistance again. And this is a psychological thing. There are people that bought back here who regret their decision when the price goes lower. And they tell themselves, man, if this thing ever comes back and I can get out of it at break even, I'm going to. So you have remorseful buyers placing sell orders, and that's why you tend to get resistance at former peaks. And we can see it here. Resistance, former peak. Certain markets like certain price levels. Some price levels are more important than others. Now, why did this turn at 93 and not 94 or 92? I mean, I don't know. It beats the hell out of me. But I don't need to know. You just need to know where these levels are. Like you don't need to know how to build a road, but you want to know where the road is if you're in a new town. So now I think there's a chance that we could get a bounce here because we have resistance here. Now there are people who sold here when the market goes higher. They experience seller's remorse and they tell themselves, if I can, I'm going to buy my, in this case, oil back. And they place their buy orders at the level that was support. That was resistance. So what happens is this: the market's coming in, and you got a lot of these people who want to buy, and they look around and they're like, "Oh wow, the market stopped going lower." Markets go lower when there's not enough buyers. So if the market has stopped going lower, that must mean that there are new buyers coming into the market. So some of these buyers start to get afraid. They start to get nervous. They start to think, "Gee, I want to buy, but someone else might jump ahead of me," because the sellers are going to go to whoever's willing to pay the highest price. So someone might bid 83. Next person sees that and they go bid 83.20, and the next person sees that and they bid 83.30, so forth and so on, and then the market jumps. So good chance that there's some kind of a bounce here. If those of you who are not futures traders, you can look at USO, which is the U.S. oil ETF, and we'll keep an eye on it too, right? I mean, maybe it breaks down and it starts going lower, but I don't know. But when we get to these important levels, we tend to break one way or the other. So we'll keep an eye on that. Also, it looks like this natural gas breakout looks like it's, well, I should say it looks like it could potentially be a breakout because it is holding. Right? So this is some pretty good strength there. I mean, the last couple times this thing made big moves higher, it was ended up reversing, like right here and right over here. And here we could see our principle of resistance converting into support. So if you don't trade futures, you can get exposure with ETFs here as well. You can buy the UNG, which is an ETF that tracks natural gas. All right. Doesn't track it perfectly for various reasons, mainly because this is only open from 9:30 to 4, whereas natural gas trades around the world. All right. So next thing to look at is our interest rate situation. So natural gas could be breaking out. Oil could be reversing. Those are the two calls there. All right. Let's just go look at our interest rate situation here. And again, I have a hard time seeing the market really climb significantly as long as interest rates keep going up. And I guess that my bet is they will. I think we're going to get to 5. We're just taking a little bit of a breather here. Remember, this is the inverse of the bonds. So the bonds are getting oversold. It's probably like some short covering, so forth and so on. But I don't see the market moving meaningfully higher with this interest rate environment. And also, too, we haven't really seen the inflation in the agricultural sector. Wheat, corn, rice, it's all down or trending lower. I think if the oil prices start to eventually funnel over into there, which they will, are going to drive prices higher. Yeah, it's going to drive the price of those commodities higher. All right, so let's go look at the S&P. Let's go through our sectors here. First thing we look at is the S&P 500. We actually look at the ETF because this is what people trade. I mean, I don't think you really can't trade the index directly, but this is has like a 99.5% correlation. So, all right. Anyway, we talked about how if we got down to the 420 level, we would find support. And you guys could throw the cannabis jokes on me now, right? 420. Well, when I was in college, it was 24/7. We didn't have to wait for a stupid day. So why did we find support around 40.20 like we thought we would? See how it's been support like the last 3 days? Well, it was a resistance level. Levels that were resistance can turn into support. Just what we saw in oil. There are people who sold who regret doing so, and they want to buy their shares back. So you have remorseful sellers placing buy orders at the level that was resistance. And if there's enough of these buy orders, then this level converts into support, and that's exactly what happened here. So now for a shorter term, it looks like this new level is kind of forming. That's important, right? So notice the most important prices on a day are the open and the close generally. So so here we had support. This is a 425, and now it's become resistance. So pretty simple range to follow here in the S&P, 425 on the top and 420 on the bottom. Been range bound for 3 days. Now, in addition to in addition to bond yields moving higher, another important thing here to watch is this Apple, right? Apple's at this critical level here. Remember, big part of knowing trading is knowing where the important price levels are. So 174, 175 was resistance for Apple last August. then it became support, and now is it becoming resistance again? I mean, it's at 175.34, but that's 34 cents on a $175 security. So this is something to watch here. If this looks like it could work ahead, then maybe we get a little pop in the market, but I don't see the S&P really moving higher. But again, I'm not always right, but the market always is. So we got to listen to what the market tells us. If it looks like Apple's going to move ahead, it's obviously going to be bullish. And then the other thing to watch, I think, is the banking industry stocks. Yeah, look at that. Wow, that was a nice reversal yesterday. See, again, we got this important price level. Was support, then it converted into resistance, then it became support. So if you were like short this or you bought puts on it and you're wondering, oh, where should I close my position out? Oh, let me go look at this level because it was a prior support level. So if it was a prior support level, there's a good chance there's going to be support there again. There are people who sold who regret their decision to do so when the price goes higher. They tell themselves, I made a mistake. I'm going to buy my shares back if I can get them at the same price I sold them at. And if you got enough of these remorseful sellers placing buy orders, the level that was support can become support again. So this is a pretty meaningful move here. And the reason why I say that is, notice what we did, all right? The close was here. The close is higher than this close, but we're back above this close here. So there was probably some resistance around 36 because this was the closing price here. So there are people who bought who, when the price collapses the next day, they tell themselves, I made a mistake. If I can get out of break even, I'm going to. So I'm going to place my sell order at 36. But yesterday we got above that. And at least this morning, things are holding. So I think this unemployment number, a lot of times these economic numbers really aren't that important, but I don't think that's the case today. I think that it could be pretty important. And like I said, it could be confusing. I don't know. It could be like a situation where bad news is good news, right? So bad news, higher unemployment. It's confusing because if we have higher unemployment than expected, it could mean we're going into recession, but it could also mean that the Fed will not have as much pressure to keep raising rates. So I'm going to just have to punt the ball on this one and just wait to see what happens when it comes out. All right, let's go look at our tech sector, which still is hanging around that important price level. Here's our tech ETF. This is like a trading lesson written all over it. You can just see how the important levels pop up here, right? So support becomes resistance. You got people who bought here who regret buying when the price goes lower and they want to get out. So you got these remorseful buyers placing sell orders. If there's enough, what was support becomes resistance. Support becomes resistance. When markets are going down, there's a lot of buyer's remorse, and that manifests itself in charts as support turning into resistance. Now, when markets are going higher, there's a lot of seller's remorse, and that manifests itself on price charts as resistance becoming support. People sell. Hey, Brandy, did you see that they're remaking the, I don't know what time you joined us, but remaking The Exorcist? Man, that was like the scariest movie. I still remember how scared I was when I watched that. I don't think I slept for days. All those like devil movies, man, they always kind of freak me out. That's like the one thing that scares me. All right. So anyway, resistance becomes support. People sell. The price goes higher. They tell themselves, I made a mistake. I'm going to buy my shares back. So, so resistance becomes support. Resistance becomes support. So people sell. The price goes higher. Gets back down to the resistance level. We got remorseful sellers buying stuff back. So this is just a really good chart here to give a technical analysis lesson on the importance of price levels. When I got married, my priest, the priest that married me and my wife told us that he went to an exorcism one time, and he said it was it was like in the middle of summer, and they go into the room, and he said the room was like 20 degrees, and then he said books came flying off the shelf at him. So I don't know. Maybe the guy's making it up, but I don't think so. I mean, I watch paranormal caught on camera enough to know not to mess around with certain things. All right. So anyway, we're going to get some meaning here or some idea. Yeah, gosh, terrifying. Um, all right. Anyway, yeah. Let me try to stick with this here. So we're kind of consolidating around this level. Let's put a little rectangle around there. It's almost like they're out of idea. Like like when are they going to run out of ideas for movies? I guess that's why they do so many remakes. Okay, so there's our XLK. So we just got to watch how it navigates this. Let's call it 164, 165. I just want to take a quick look at Microsoft. So Microsoft and Apple are like together are like I think like 40% of the technology sector. So if you're trading tech, you should really know what Microsoft and Apple are doing. But here we got Microsoft is kind of in a range, right? With 310 on the bottom and 320 on the top. And it's really amazing how these nice round levels someone's calling me from Winchester, Virginia. Huh. I don't know anyone in Winchester, Virginia. Probably just someone looking for money, like always. Actually, my daughter's in Virginia. Maybe that's her call. She's at school down there. Maybe she lost her phone or something. All right. So anyway, so Microsoft, the level to watch is like 320, and that's right where we are in the pre-market. All right, let's go see. Now the financials probably did okay with the banking reversal yesterday. Look at that. Oops. Keanu Reeves and Al Pacino. That was a devil movie. That was pretty good. All right, so here we got our Spider ETF, the financials, right? A little bit of a reversal here. And I guess we'll just keep going through here. Let's just look at our consumer discretionary. Now remember, if interest rates keep going up, this has kind of formed a range as well. So you notice how support here became resistance over here, and so this is an important level here, 155, actually 156. So it was resistance, became support, became resistance, and has become support again. So I mean, you don't need to be a chart guru or a former hedge fund trader to look at this and see that, like, oh, some of those price levels are important. Why do we turn to 173, not 178? Got a little bit above it here, but that was only for a few days. Now we can look at our utilities, right? And these things have been selling off. I mean, look at that. It's been in like a free fall because interest rates are going higher. Now, when most of the time people are buying utilities because they want the income. Utilities traditionally pay high dividends. So people that are in utilities are starting to say, hey, I can get a better yield in the bond market. So I'm going to sell my utility stocks and I'm going to go buy bonds. Now this is like epically oversold here. Let me just take a look. I'd go check it. I don't know. Well, maybe I would. I could check it out, I guess. Last movie I saw was Rambo: Last Blood. It was pretty funny, man. I had like the day off, and I was going to go uh, meet one of my friends there, and he ended up having to work. So I go and I go and I sit down, and there's like no one else in the theater. And like by the time it was over, like I was the only person left there. Same thing with I took my kids to see like Superman versus Batman a few years back, and so anyway, we go sit up in the front. There's like maybe 20 or 30 people in the theater. So we watch the movie, and it's like just got so friggin' long. And when it's over, we get up, turn around, and it's like there's no one there. Like everyone had left. We were the last people in the theater. We were the only ones. I mean, that movie would have been okay if it was shorter, but it's like Superman has powers because he comes from like a different planet, right? He can like fly, and he can like he grew up on a planet where the gravitational force is so much heavier, so they're so much stronger. And then Batman is like just this dude who works out all the time. So I don't think it's really Superman should have won. But anyway, we're really oversold here. Let's take a look at the Bollinger Band on this one. I like using these Bollinger Bands. So these things are based on statistics. So the upper band is 2 standard deviations above the moving average, the 20-day moving average, and the lower one is 2 standard deviations below it. Now, 95% of trading, according to statistics, should occur within these 2 bands. So we can see it's meant some pretty accurate calls, right? This one was a good buy. This was a good buy signal. Here. Not really there. That was a good buy. And now we got below the band and we got back in it. So that could signal that we're going to get a little bit of a reversal here. What we were looking at yesterday, I forget if it was here or in the other class, but is this Pepsi? This could be a potential trade here, because look at this thing. I mean, it's just completely broken down and it's extremely oversold. I mean, let's just see this here. I'm gonna see when the last time Pepsi was as oversold as it is now. I actually bought some Pepsi at the store yesterday. I don't usually drink soda, but my wife does. All right, so here we go. All right, we almost got this oversold back in August of 2011, and almost in the housing crisis. All right, so the last time we got down, Pepsi was this oversold was July of 2002 and August of 2002. And I remember that very, very well, because that's the story I told yesterday about the guy that I work with who was the narcissist who didn't believe that, he told us to sell even though we wanted to buy. So anyway, the bottom line is this, right? Oversold conditions draw buyers into the market. A lot of Wall Street trading is based on this concept of reversion to the mean. And it makes sense, right? Things don't go in a straight line. They get a little overbought, oversold. It's like a wave kind of a thing. So this is something to look at here. Now, just because something is oversold and at support doesn't mean it's going to reverse. A good strategy a lot of times is to wait for the reversal to actually start before you jump in, because this could just keep going lower. I mean, this is some pretty cataclysmic selling, though, considering that there's no news on it yesterday. I mean, down 5.2%. Coke and Pepsi's drugs fall after Walmart says weight loss drugs have customers cutting back on calories. Huh. I mean, I don't know if that's enough to drive it. It does make sense, though, because I've heard that those weight loss drugs, they kill your appetite. So maybe that's part of it. But even if that's true, right, markets still could bounce. Even if their sales are going to be way down, when things get this oversold, there's always going to be people coming in thinking there's going to be a reversal. All right, so let's see what Coke looks like. Wow, look at that. It got crushed too. Now, this is like one of those things here. Is this really because of what Walmart said about weight loss drugs? This has reached a support level as well. Look at that. So let's call it 52.50. Where do we close? See back here, there was support here. Now, this is an example of market memory. You might say, well, gee, Mark, that was like, you might say, like, gee, Mark, that was a long time ago. Well, guess what? This is what we call market memory. A price level that's important can retain its importance for a long time. Years. Like, look at this CVS chart. These guys are in the news. I actually got to go to CVS today. But this is a chart I show people when we talk about this concept of market memory. And it just shows you, like, okay, so CVS ran into a peak back in 2015, hit the same peak 7 years later. 83 was resistance for 2.5 years. Support 52, resistance at 76 for a year. So these things can stay intact. These levels can stay intact for a long time. All right. So Exxon is buying Pioneer, which is a huge, huge deal. Monetarism is back. Now, this is pretty interesting because one of the reasons why the Fed has screwed up so much is because they follow Keynesian economics, and the Keynesians only look at the demand side. They don't look at the supply side. So the Keynesians only look at the consumer. So when interest rates are going up, they say, oh, gee, this is great. Interest rates are going up because the economy is expanding. So this is just transitory. Eventually, the economy will slow down a little bit, and the rates will come back in. They don't look at the money supply. Money supply is the amount of money that's in the economy, right? And this was the other school, or one of the other schools of economics, monetarism. And just think about it. If you got a closed economy and you got 100 goods and $100, those goods are going to cost $100. If the government comes along and throws another $100 into the economy and there's no more goods, those goods are going to end up costing $200. So these people at the Fed don't pay attention to money supply. And that kind of started with Alan Greenspan told Congress the long-run relationship between money and supply and inflation seems to have broken. But Greenspan's a fool. So, and this just kind of shows you why we're in so much trouble, because they're watching the wrong stuff. Pepsi and Coke. Let's see. I think the Coke would be. Actually, I think Pepsi would be a little bit easier. So let's see. Now, remember, though, these guys are going to be pretty correlated. So it may not make sense to go into both of them. It may make sense to go into whichever one looks like it's going to move more. Now, I would say for me, this would be the level I would get in over. I'm just going to say 162. So that would be my level there. So I wouldn't be catching the exact bottom, but like this thing could keep falling. There's an old expression, catching the fallen knife. But if you wait for the reversal to start, maybe you just kind of jump in. That's like a momentum trading strategy. You wait for don't try to catch the exact bottom or top. Wait for the reversal to start. So I'd be looking at 162 there. And for Coke, I would be let's see here. I don't really know. I don't really see something that really stands out. I guess 54. I would say if we get back to 54, that's where I would think about jumping in. I mean, not that we spent a lot of time there, but this was the support and this was resistance. That's just yesterday's chart. All right, now these unemployment numbers are going to come out, and instead of watching the number, let's just watch the market. All right, so the market just fell pretty precipitously. All right, so let's think, what could that mean? So was the unemployment less than expected? So the perception is the Fed's going to keep, there's going to be pressure for the Fed to raise rates. Let us see. Mr. Steven, my well keeps like, I got this like, there's this big tank where I pour this like potash in it. And generally when someone's running the water in the house, it'll start like clicking. But now it seems to be going even without water running. So I hope there's nothing wrong with my well. Or maybe I'm just paranoid. But like right now, there's no water running in the house, and I could hear my well going. Payrolls increased much more than expected. All right. Yeah, okay. So the payrolls are much more than expected. Shows the economy is doing really well. The Fed's going to have to keep raising rates. So that makes sense. So much for our reversal. Sounds like the bladder tank has a hole in it and is losing pressure. Huh. I'll have to talk to you about that later. All right, so let's see now. Now this is going to put all what we were talking about back into play here. So Apple is going to be below this 175 level, right? The level or pressure switch is off. All right. Or broken. So is that a big thing to get fixed? Like the pressure switch with the well itself? Or is it just something that's like I can do myself? So it's like 250 bucks. Is that what you're saying? All right. Well, that's better. Okay. All right. Maybe I'll talk to you later and you could walk me through it if you're free. Yeah, because I don't want them freaking digging on my well, man. So one thing I don't like about living here is the well. All right, anyway, let's go back to this. So Apple, we can see very clearly now what was support converted into resistance. We'll go back and check out the banking stocks. I actually got to go over to the well place today because I got to get some more of that potash stuff. Yeah, this hasn't really moved. Let's see what's going on in our interest rates. So, we got any exciting plans for the weekend? Not me. Just going to be working on putting my presentations together. Wow, look at this, man. Whew. Those move in the bond market. I'm doing this lesson on. It's actually it started out as one lesson, but it's turned into two because it's so long. But I'll let you guys know when this is done. But we just talk about some technical trading strategies like RSI reversions, Bollinger Band. Like a lot of trading is based on this concept of reversion. So let's throw a indicator on here. All right, so a lot of strategies are built on this like reversion, right? And essentially, it's like trading strategies are either based on breakouts or reversions. There's probably some other stuff going on too, but those are the most popular ones. Wow. Well, at least you know how to fix that stuff, Matty B. I would be screwed. You see, it's like it's going again now. Yeah, because I got the door open. Well, I suppose I should fix it because the longer it goes, the worse it's going to get, right? You know, home ownership is great until something goes wrong. All right, so I'm just going to bring up a random stock here, international paper. It could have a broken pipe. Well, it's not leaking. You mean a broken pipe like out underneath the ground? Well, if it's only $250, I mean, that's not. Oh, geez. So if it's a broken pipe underground, now we're talking about a big job. Oh man, that's not what I wanted to hear. Oh well, 5 to 10K. Well, I'm gonna have to go look at the pressure switch first. Well, I guess I'll just have the well guy come look at it. All right. So anyway, I guess I'll just wrap things up here. But before I go, just let's talk about like a reversion, right? So this is our RSI indicator, and when this blue line is above the horizontal red line, it indicates overbought conditions, and it's below it indicates oversold. But those conditions, in and of themselves, are not enough to take a position, in my opinion. You got to. I think it's better if you wait for the reversal to start. So once the blue line gets back below the red line, that would be your sell signal. So that would have been right here. Once the blue line gets back above the red line, that would be your buy signal. So that would be here. Yeah, Tesla's down again. Yeah, I think the EV market, like, Ford has a bunch on the lot that they can't sell. When's the last time my well had a service? I don't think it's ever been serviced. Not since I've been here. All right, now you're scaring me. Yeah. I mean, the lot, yeah. Yeah. Oh. All right. All right, everyone. I'm going to get going. Um, yeah, but if they come in, they're like, oh, we got to dig it up. It's going to be 10 grand. I don't know. I guess I'll figure it out. Winter is coming. All right, everyone. I'm going to hit the road, but I guess I will see you all on Monday. And I hope everyone has a nice weekend. So until then,